for the first few minutes. So thanks for dialing in this morning for our webinar on strategies for proven small business growth. We're going to actually start with a couple of poll questions just to take the temperature. And so I will launch the first poll and give you a minute or two to answer that. Have some engagement. This poll question is, what's your highest small business priority? Okay. All right. Thanks for your feedback. So looks like 2/3 are deposits, 1/3 credit, which is awesome. And then next poll question. This is just getting a pulse on how satisfied you are with your current small business business generation activities. And this is, think about new to bank as well as just overall small business growth. All right. Looks like great feedback so far. I think we got a pretty good sample. So it looks like you're in the right spot. So this webinar is all about creating more confidence in your plan or a new plan, and so that's great to see that that's the feedback, and look forward to sure that's ended. So look forward to sharing insights on exactly those two topics. How do we drive measurable small business growth? And then everybody has unlimited budgets, right? Well, actually, we hear that people have budget constraints, and perhaps this year it's even more constrained than in the recent past, just with where the interest rate environment is, overall economy, uncertainty, credit quality. And so this talk this morning is focused on pulling in all our expertise on what you can do to better leverage up primarily the resources you already have at the bank. So this is not about how to launch new small business products, build branches, hire bankers. This is about using some very smart data analysis and some targeted marketing tactics to drive more production through what you already have. My name's Dan Marks. For those of you who have not met, serve as the president of Infusion. Longtime banker, so I've been at Infusion for 5 years. We've seen really nice growth over the years. I've got a couple of colleagues joining me as panelists who are all experienced bankers as well. I served as the Chief Marketing Officer of Hancock Whitney for 5 years and the Chief Marketing Officer of First Horizon, what is now First Horizon before that. So 25 years in banking, doing what we're talking about today, and then it's really a great privilege to be able to work with Infusion and provide analysis and consultation, as well as proven growth strategies to help community-focused banks really thrive and help serve their clients and generate some shareholder returns. So as we get started, based on that perspective and Infusion's perspective, it covers just about every state in the country. Hundreds of institutions have taken advantage of our analysis and execution support services. Our quick rate business serves thousands of banks through call report data, CD trading, and those kind of things. And so a really rich perspective informs these priorities. When we talk about small business growth, one of the fundamental realities is the business buying cycle, as we all know, is more elongated. And so as a business owner ourselves, we've learned that even in a unique way that we observe from the bank, but we just know there's a longer buying cycle, and so the marketing has to recognize that and recognize that there's a lead generation component for it. Um, the ROI is also different. So, and particularly small business is in a unique position. So we know commercial is very lumpy, very long lead times. Consumer, of course, is very transactional, very very granular. And so small business marketing ROI has some of the it's more it is more lumpy than commercial, but much more um, and so it's more driven by quality compared to quantity compared to consumer marketing. And so um, those are just really fundamental understandings that we recognize in thinking about how do we lever up the base for growth. Every bank that we've ever analyzed on 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 business, and we're going to show some examples of that kind of analysis later. Um, we have not yet a bank that has 100% penetration of DDA, and so that's a great news when you talk about a deposit growth priority. But then also there's a large percent, so there's a percentage of uh, of loan single service, and then there's also a large percentage of single service DDA, and so both of those populations are really fertile ground to mine. And then of course, going after prospects is a key opportunity as well. The amount of money a business keeps in the operating account tells a ton about capacity to meet more needs. And so we'll talk more about that uh, before or in a minute. And then transactional engagement correlates with propensity. So and again, we'll unpack that. But and so the short story is your data that you already have um, properly analyzed provides a really uh, uh, strong ability to understand propensity and then prioritize action. And then the last just key principle we'll talk about is small business owners frequently commingle consumer and business lending. And so they'll consider, of course, trade-offs on borrowing capacity. They'll look at, and then particularly the smallest, the micro business, they'll make rational decisions on financing. If the perspective is there's a personal guarantee, sometimes they'll tap into home equity for those advantages, even if it's to fund a business. And so there's a much blurrier line on the small business side between consumer and commercial purpose activities. And so um, recognizing just that reality can help us understand and understand opportunities and take advantage of them. So those are really some foundational guiding principles around small business growth. Um, but when it comes to converting those principles, those high level principles, into a data driven plan, what we found is having a true discipline that starts with using data to understand the opportunity is really key. But then not just sitting around looking at the data and understanding, but actually going after it. And so what we'll walk through for the rest of the time we have this morning is highlights on just proven success for how to analyze growth, but then how to go after it, how to actually convert that opportunity into dollars and have a high degree of confidence of plans that will incrementally contribute to your success this year. So the foundation of that data-driven discipline for growth is the analysis, and then the action after that. And then you'll notice this is a continuous improvement. So we found over and over in this space is doing random acts of marketing where we just kind of sit around and go, oh, we need more activity. Let's throw some stuff against the wall. That just frustrates everybody, right? It frustrates the marketing team because they don't know what's going on, or they don't have any kind of continuity. It frustrates the the business bankers because they're not sure what's coming down the pipe. And so having a systematic plan based on data that everybody understands what's happening and what the expectations are, and then seeing it and then adjusting based on that tracking is really key to creating that data-driven discipline for growth. And so it all starts with the analysis starts with understanding needs. And in banking, particularly in small business, there's really three fundamental needs that we satisfy, right? So we satisfy the liquidity management need of the business, i.e., what's a excess deposit. We fundamentally satisfy the transactor, the operating account needs of the business. That's DDA. And then we satisfy the borrowing need. So those three fundamental needs are what we do, and the overlap of those are relationship banking. So when we think about growth, understanding where we have potential to take somebody that we're only using from an operating account. So if we're seeking credit, if we're seeking to grow credit, mining that operating account to say where are our best opportunities to drive credit, that's possible. On the flip side, understanding where are those opportunities that we have for credit, and using that to drive either additional operating accounts or transactions or deposits. And then understanding where people have capacity and propensity for those needs informs a prospect plan as well. And every individual business has different levels of capacity and propensity for those needs, and the data helps us understand that. So what do I mean by the capacity and propensity? Well, an analogy from the consumer banking side is useful. If a consumer has a 520 credit score, they may have all the interest or the propensity to borrow, but they have no capacity. We're going to use that same technique to understand, to analyze your business customer base and your consumer, by the way, because a key source of business growth is cross-selling from consumer into business. And then, so we use a variety of data techniques to understand individual business owners' capacity and propensity for additional needs. And then awareness takes that data and converts the potential energy into actual conversions. So creating awareness focused on those needs is how we convert the data from an academic exercise into money in your pockets. And so when we think about assessing those opportunities, a few key questions are: what does my average balance tell me about my relative commercial versus small business mix? How does that affect my approach to growth in each category? How does my single service penetration compare to peers in checking and lending, right? You've probably done some initial analysis yourself. You have a sense of what your single service relationships are. For banks that have a relationship linking program, they may have an even more advanced understanding of that. But having the context of how does that compare to peers helps you understand where is my low-hanging fruit, where is maybe something that's going to take a little bit more effort. And so it helps you prioritize what's that relative mix of internal growth or cross-sell versus external growth from prospect acquisition. And then how concentrated are my business deposits? Do I have opportunity to efficiently expand based on where people have, maybe a high deposit household or business household has more deposits elsewhere. And so these three kind of key strategic questions, we can apply data to help us understand. And so we'll look at benchmarking, not just understanding where your relationships are across the intersection of these needs, but by comparing to peers, we're identifying areas of relative strength that may be built upon, as well as growth potential. And so a tangible way that looks, and so this page 8 on the slides that we're talking about here is actual data from an opportunity assessment for a peer bank that was looking to grow in small business. And so you'll notice that the average balance for deposits on this chart, uh, the total checking balance at the kind of the middle of the circle or the middle of the page here, um, the average business checking balance at this bank is $70,000. Okay, you probably know that yourself. How does that compare to peers? Well, over on the right, that's 20% higher than peer average. So that's a really foundational element in understanding capacity and, to a certain degree, propensity for further growth. Because if you have similar levels of penetration, and so you'll notice that the total checking penetration line is close to the 100-yard benchmark line, but the checking average balance is higher. That's a powerful factor to say I can get more uh, core operating DDA penetration. Business money markets are becoming an increasingly important way for businesses to manage excess liquidity, right? And it wasn't relevant um, when interest rates were zero. It wasn't relevant before the regulations changed that allowed businesses to earn interest. Now it's relevant, right? So as businesses have excess deposits, they're looking at it, and so if they have excess deposits in your bank, they're shopping, or they will be shopping. And so if we're able to proactively reach that, but then also understand where you are versus peer. Somebody in the poll, or there was also a polling question around credit, right? So on um, the credit penetration is above peer. Now, notice that the 30% penetration in the middle of this chart is so 30% of the relationships have a credit relationship of some kind, and then the average balance here uh, is shown. Well, so even this bank is above peer in total credit penetration, and the average balance is near peer. And so but then you combine that with the fact that it's above peer, but 30% penetration, that's an area of strength that can be further leveraged to drive growth. And so the other way to look at that is single service. So in this case, um, this would be from the same bank before. Uh, they have actually higher single service penetration than peer. So checking penetration is 35% higher than peer. Uh, Total credit single service penetration is almost twice peer. And here you're looking at the percentage of the relationships that are single service. So in this case, 53% of those credit relationships are single service, right? So uh, think about the other way. Half those cases, they have an opportunity to drive more operating accounts by targeting existing single service credit relationships. Um, and we use a householding methodology to help identify 80-90% of the actual multi-service relationship. So it's highly predictive, and it's able to be compared. So this is a great opportunity to say, if you just got your single service credit penetration down to peer, you could sell a DDA to half of those credit relationships. And then on the flip side, if I want to grow checking, uh, well, yeah, so growing checking is there's some low hanging fruit in driving cross sell to those existing DDAs. We already saw on the previous slide that there's a great deposit cross sell opportunity, and then acquisition is another key lever, right? So starting with understanding where can we expand relationships is a key point. new to bank. And so in this case, this bank, if you look at the kind of the middle of that slide, the total checking on new to bank is 79% to peer. So think about this. The other way to think about this is uh, peers are getting 21% more new to bank relationships than this particular bank. So they have some upside just to get to peer on new to bank prospect generation. And so that the analysis reveals exactly that. Um, so this is the analysis phase. We're using detailed analysis compared to peers to highlight opportunities. If we just stop there, it might be an interesting academic exercise. When I was at the bank, every once in a while you'd have peer benchmarks come in from this source or that source. And it's like, oh, okay, well, this is kind of interesting. We're 21% below peer on new to bank. What do I do about that? The other part of the infusion practice is because we work with banks on analysis as well as execution, we're able to bring to bear to convert this analysis into recommended plans to take the opportunity and convert it into actual action plans. And so the way that looks is um, in this example, we've taken the specific analysis on opportunities for credit and deposit growth and analyzed and so you notice we've identified on this particular marketing calendar, there are 2,305 businesses with a propensity to add checking. So we already have a relationship. We've identified specific 2,305 businesses that not only don't have checking but have some propensity indicators to say they're higher than average likelihood to um, to to add that operating account. And then on the bottom chart, there's 4,676 opportunities to add a small business loan, a credit relationship. This is in this particular calendar is from the context of a comprehensive analysis that addressed both small business and consumer. But you'll notice there's those two dark lines that are the specific small business growth. We take that data, that specific audience, and then we're able to reach them across a multi-channel communication set. So this is not just um, run some newspaper ads and hope that something happens. This is targeted direct email outreach to that business owner, as well as targeted digital, so display as banner ads. So we would identify where those business owners and those business decision makers are interacting across the internet. Today it might be the Masters app, but you're reaching that specific IP addresses that match those business owners, and then other social media, so Facebook, Instagram, LinkedIn in certain cases are great opportunities to reach specific people based on those needs. And then you'll notice an ongoing comprehensive plan. So the idea is this is not just to throw something against the wall and see what works. This is reaching a audience that we know has the capacity and propensity for that need. This is the relationship generation opportunity. We can also reach prospects that are with the same sort of analysis. And so we're reaching them for a specific message based on their needs, and we're reaching them in a variety of places so we improve the chance that we're there. We're generating awareness when they have an interest. We're cutting through the clutter. Um, and so the way that looks tangibly, you'll notice here's some examples of banks we've worked with. So our business checking gives you what you need, more time. You'll notice there's a value proposition tied to the brand. Doesn't necessarily need an offer. There's two examples where there is a specific cash offer for opening that business checking account. But we're creating digital ads, reaching specific people that matched that list across audience, and in a way that's informed over a lot of testing to say, I want to reach you enough that we break through the clutter, but not too much that we become annoying. Loans, so we talked about credit, seen the same sort of success, and whether or not you're promoting a specific term or it's a more solutions-oriented message like the the People's Bank or the Berkshire Bank opportunities there, there's credit. So that's how we're creating outreach. Part of our planning process is developing a specific pro forma of what you can expect. So we do all this analysis. We track hundreds and thousands of campaigns every year, and so we have a very robust idea of what's the combination of audience and channel and creative mix that creates outcome. And so in this case, you'll notice there's a specific pro forma for all sorts of campaign types. There's a pro forma on that business checking, the business loan. And so here you can see that difference. So the business, the awesome thing about a small business checking is it's definitely a more valuable average DDA balance than consumer. It's going to be a little bit lower early in the tracking window just because there's a ramp up period. But those average balances are way higher. Now they're obviously less than a true commercial balance, but they're there and we're trackable. And then the business loan, there's a specific deal. And the way that we can create that pro forma and help you understand what it looks like. And oh, by the way, we work on a pay per performance basis. So we put our money at where our mouth is behind the pro forma. We generate these recommendations and these plans. We'll work with you. We'll put our money at risk and only get paid based on a very advanced tracking where it goes down to the actual open account that match the objective of the campaign. And so an example of that tracking is we're reaching out to that specific audience. We're generating awareness through the digital touch points and impressions and clicks. The purchase response is we're looking at just a specific account type. So if we're promoting business DDA, we're only looking at businesses contacted within that campaign within a specific time period that opened a business DDA, and we're looking at the balances in that account. We know there's an ongoing relationship beyond the tracking window in terms of fund up and the overall relationships as we're moving single service to multi-service. There's going to be a positive effect there, but that's we typically do that in kind of longer term. And so a dashboard about how that looks in real world is included here, and you'll notice that there's so one characteristic is there's a specific CPA. So we put our money where our mouth is and charge just based on the accounts that we're able to generate. And then most banks put in place a budget cap, and so there's a way to even further limit the risk. If we blow through the pro forma, you're still only paying a maximum amount, and so that's where the totals here can even be lower than the fixed CPA. But that's where the tracking occurs over time, and so some examples of just tracking. So business DDA, we see that it boosts growth without the product or banker investment. So business DDA, we're using those drip campaigns. We're reaching out to your audience, clients who have tried to do this themselves or with kind of a general ad agency, frequently say that, oh yeah, your data-driven multi-channel approach gets me 2 or 3 times the performance that I used to get, or even just I get performance. I had no idea what it was because you're actually tracking results. But we see consistent better than 1.5% quarterly response rate for business DDA, $71,000 average response balances a quarter, and then at a cost that represents a 1 to 2 month average payback. So when we're running these campaigns for business owners, that's what we say. You're able to boost, and these are essentially variable cost because you're paying on a performance basis, only paying when there's results generated, and so and they pay back basically before you even get the invoice for the campaign. Business loan is is also very consistent. So we see consistent quarterly response rates. The balances are a little more they're a little more seasonality driven and just capacity, but still we see on average 199,000 average loan balances, and so and that's an average. We'll tailor the pro forma based on the characteristics of the particular bank, and so you understand kind of what you're expecting. But just big picture, we see overall an average of 199,000. And again, the payback here is 1 to 2 months. So you get really good results, predictable outcomes with very little risk. And so putting this all together, here's an example from a client who needed to boost small business growth. They were kind of in a similar situation to what we hear. They had process and budget constraints, couldn't hire bankers. And so we did the detailed analysis that we talked about here, identified cross-sell growth opportunities that could be implemented in 60 to 90 days. In this case, we estimated that the campaign would attract 20 million in new DDA and loan balances within the first 9 months. We actually produced 27 million at a cost that yielded a 2-month payback. So that's the way this whole process comes together, and we do this all the time with banks all over the country to have these kind of very predictable results. And so as we wrap up today, just want to emphasize a couple of key takeaways. There is a landscape is dynamic. We know the budget challenges are real, but low-hanging fruit is embedded in existing business portfolios. And so particularly for credit, existing portfolios, there's those capacity and propensity factors on the deposit side that help you manage credit risk and still drive granular targeted growth very rapidly without adding fixed expense. And so the other key takeaway is whether or not you do it with us, which we hope you do, or with somebody, leveraging best practice peer benchmarking can help you discover and prioritize the exact opportunities to drive balances and NIM. And then the third key takeaway is accountable, data-driven marketing is really, we believe, should be table stakes at this point. There's capabilities there. We do it every day for banks and every time we talk to a bank, they say, "Oh, my data is dirty," or whatever. But we're able, because we do this all the time, every day, we're able to rapidly help them implement that data-driven, financially accountable marketing that can be a key growth driver for the bank. And so, thank you for joining today. Are there any questions? I've not seen any in the chat yet. Right. Well, you said at the beginning of the session through the poll question that deposit growth was important, credit growth was important from small business, and there's really a desire to understand, how can I improve the confidence in my plan if I already have one, or I need a plan from the beginning. And so, thank you for your time today. We'd love to follow up with you to understand, just to talk more about our process for doing opportunity assessment. Trevor Knott, who's on the call, is my partner that runs runs new business development. Would love to reach out to you and discuss how those needs are. We're including our contact information here. Everybody on the call will get a copy of the slides and a recording of this in a few days. But we look forward to following up with you and exploring how we can help you drive and accelerate your small business growth, help you drive more deposits, more loans, more new to bank relationships at your bank. So thank you for your time, and have a great weekend all.